X, and as usual, happy to take questions at the end, and also happy to take questions offline at investors@rent.com.au. We do have a few questions already, but I'll go through the presentation and we'll get to those at the end. Right, so just I guess a few recent highlights. Strong rent pay growth over the last few months, but in the last 2 months we've added 20% since we released our quarterly figures of around just over 7,000 2 months ago. We're now just shy of 8,500. So really good growth, largely led by agents, although as we run into Christmas, we'll be starting a new consumer campaign and we expect that to keep ticking up nicely. Big focus, and we've talked about this in previous presentations, the hit this year on our advertising revenue. So diversifying that has been a big focus for us. We took rent bond public recently, that allowed us to. We took rent bond public recently that allowed us to bring in our referral partners, and that's added about 40% to our growth. And yeah, things are ticking along nicely there. And on the partnership side, we've lowered our credit card rates to 0.99%, now industry leading, and I've got a separate slide on that, but we've seen some great growth in that area as well. We're working with major CRMs on integration, and our scale is allowing new payment options to be brought forward. So thanks, Jan, for jumping ahead a slide. Just on the financial summary. So, I mean, it's clear there we've taken a hit on revenue over the year. So I guess the summary of this is it's no surprise that our nature of our audience means they're really attractive to the home building industry, and they pay top rates and they advertise on our platforms. That's slowed over the last year. We've had various partners either cancel or just pause. They simply have too many leads to digest at the moment. So a big focus for us has been diversifying that income, and I'm pleased to say we're actually making some really good traction in that space. Obviously, that's seen a corresponding hit from an EBITDA point of view. I guess we just wanted to call out a little bit of the rent pay side here. Our marketing will be reducing in this half and rolling forward. We've done a lot of optimization in that space. We're focusing on social media and obviously our own owned channels, and we're rebalancing towards our agent side as well. But we just need to pull out that getting into the payment states, it's highly regulated. So there's a cost of play in this space. So whether it be staffing, compliance, etc. So that breakdown there, I guess, is a handy guide for everybody. We've shown this one a few times, but the point of it is that we own from a person starting to look for their first rental to a person considering home ownership. And I'll touch on it a little bit later, but moving into that ownership space through savings products and mortgage builder is key for us over the next 6 months. Cool. This is a great slide, and with fantastic stats for our portal. We're the leading portal for rental only in the country. If you look at the market at the moment, we've got about just over 50,000 listings nationwide. It's down, from our peaks over 100,000, and the challenges facing renters at the moment is well documented. So the fact that we've been able to hold up has been really good. The product mix obviously changes slightly depending on what's happening in the market. And one of the things this page doesn't really show is that our key metrics, web and app, are really strong. So things like bounce rate, page views, time on site, they're indicative of really strong organic and direct traffic product. So if we compare ourselves, and we compare ourselves every day to our competitors in this space, we rank really well. We don't buy our traffic. People come to us because they want to. Next one, yeah. I touched on this briefly, but yeah, getting our portal back to focus. So Opening up our bond payment. We're now the largest provider of bond finance in the country. Still more work to do on that. We've got new agents and new partners wanting to offer those bond products. And we've got some interesting opportunities ahead of us to lower the cost of capital and make that product even more attractive. The diversification of our advertising revenue is still key to getting that sustained and ongoing growth. Thanks, Charlie. So into rent pay. I guess, you know, these are the three key features, I guess, that we offer for consumers. And on top of that, there's flexibility, there's time shifting, value shifting. We're still the only payments platform out there that actually faces tenants. And, you know, across our entire base, 20% or just over 20% of our customers are choosing to use rent pay, irrelevant of what the agent's asking them to use. We're transparent to the agent. So that's really good. It keeps us on our toes, ensures we're competitive, ensures we're attractive to consumers. There's more product work coming through there, so really happy with where we sit at the moment. On the agent side, a lot of work over the last 3 months around the agent side, integration into major CRMs. Agents have their own portal. They can go in, they can automatically create tenants. We can bulk email out tenants for fast onboarding. We recently onboarded an agency of about 600 tenants 4 weeks ago, and we had the entire tenant base across within the 4 weeks. So that was a great outcome, and it just shows that the efforts we're putting in on the agent side, it just makes their life so much easier. The other thing to call out there was that by offering tenants more ways to pay, by offering them savings mechanisms, by giving them flexibility of when and how, we're actually seeing our arrears rate on rent pay lower than industry. And I think that's a really important thing as well. Active rent pay customers, just shy of 8,500, great growth. We're looking to continue that through. We have an agent pipeline that's really strong. Probably going to slow down a little over Christmas with agents onboarding. That'll kick off again in January, but we have a consumer campaign kicking off shortly that will continue that momentum through. So really good result. The last 8 weeks have been our strongest growth ever. And as I said, up 20%. This was something new for us that we probably we hadn't really looked at before, but getting around into the conferences, I mean, it builds awareness, but it's just a really cost-efficient way of getting in front of a lot of people and having those conversations. So we do a lot of outbound calling, we do a lot of work over the phone, but this was a chance for our team to face with a lot of people, and that's created a really long tail of opportunities that will continue to grow, and we'll be doing more of this again next year. ARPU is a key focus for us. There's 2 levers to growing our rent pay business. One is the number of subscribers. The second is how much we earn off those subscribers. So we're ticking along nicely. What's interesting or core for me is that the products that we're developing at the moment are all significant ARPU drivers, as well as being attractive to the consumer. So things like new payment options. The payment options we offer at the moment, credit cards, direct debit, Pay ID, etc., are all regulated. So our ability to earn a margin on those is quite low. As we get into unregulated space, whether that be China payments, Alipay, WeChat Pay, there's the opportunity to not only provide another layer of convenience to consumers, but for us to earn a margin on that as well. Mortgage Builder is another one of those things. As we build a savings product and then offer a return to consumers and then lower the cost of capital on our bond financing product, there's an opportunity to earn a margin there as well. And to be honest, this is what it's all about. Our portal business, we sell today, we've got to sell the same thing again tomorrow. So it's subject to cyclic nature of the business, whether that's shutting down over December for Christmas holidays, or as we see changed in the market dynamics with rental availability and whatnot. So rent pay is really about that annuity type revenue stream that just continues to compound and grow. insulates us against any cyclic nature, and you can see the growth there. So we're up to around 30% of it, 13% of our revenue is now that rent pay business model. Thanks, Sean. We've used this slide quite a bit, and it's illustrative only, but just to show that the power of these two levers of growing our subscriber base and also growing our ARPU. It's a massive market. Our portal is fantastic, 700,000 UVs a month hitting our portal, but we've got to remember that 95% of renters are happy in their home and are not actually looking to move at the moment. So this allows us to have a two-pronged attack, if you like. We tackle tenants that are moving, but rent pay is open to everybody that's not moving at the same time. And of course, rent.com.au is just a natural marketing channel for us. Thanks, Alan.
We've got a question on that slide from Jeremy. He's saying that it shows 25,000 users gives you $150,000 of revenue per month.
Yep.
Based on your current cost, this won't be EBITDA positive. How and when do you expect significant growth towards becoming EBITDA positive for rent pay, as this number seems far away from growth rates?
So we're at 8,500 today. Look, we're accelerating as we go to it. So a couple of our major partnerships that will be coming online in January around CRM integrations will make the not only increase the awareness and the simplicity of our product. We already integrate into every platform out there, but this takes it to a new level and becomes native for an agent to be able to use rent pay. So we're expecting strong growth out of that, and we'll be focusing a lot of effort on that. You're right, subscriber numbers and ARPU are the two levers. We're seeing break even at the moment at around the 35 to 40,000 mark, but our plan is to hit that over the next 12 to 18 months. I just wanted to, I guess, call out the credit cards a little bit. It was surprising to me, but for consumers that join us, as I mentioned before, 20% of our customers choose to use rent pay. They're not attached to an agency that uses rent pay. And of those, 49% are using cards. The number was a little surprising to us, but I guess as you dig deeper, it's probably not. We've got people that points hacking. We've got people that maybe new to Australia, new to renting, don't have established bank accounts, have a card existing, etc. So I guess responding or looking at the opportunity within that, we've just lowered our credit card rates. And as I said, this will be supported by a campaign running over the next couple of months through Christmas. We expect that consumer side to get a good lift. Thanks, Sean. And I guess just a closing slide on where we're going. The deposit builder is something that we're quite passionate about. The two barriers to getting into to owning your own property at the moment are demonstrating serviceability and obviously building that deposit. So there are a number of ways we can tackle this on the deposit side, ranging from really easy through to really complex. The more complex it is, the better margin we can offer our consumer in terms of a savings rate. And then obviously there's opportunities to impact our other products, rent bond, lower the cost of funding, etc. there. So that's what we're focusing on. And this will be rolling out over the next 6 months. The rewards side is interesting. There's a lot of people out there doing it. We have a slightly different spin. The focus for us is that everyday spend lowers your rent. So we're looking at rewards products that are match into a consumer's everyday behavior. So, example there, if you're shopping at Woolies, buying fuel or whatever, and you're doing that anyway, and you can get a saving out of it and then put that saving in your rent pay wallet and actually lower your rental costs, that's the product we're interested in. That'll be rolling out over the next few months as well. And then on the more ways to pay, we're getting some of the feedback we're getting from the agencies is they're really keen on the alternate payment options. So we're pursuing those. As I mentioned previously, it's unregulated, so it gives us a margin earning opportunity. And of course, Pay2 is coming through in Australia, which is basically the instant payment version of direct debit. We've already seen direct debit take a fairly big hit in terms of people switching to credit cards and Pay ID, and we think pay 2 will be the final nail in that coffin. Outlook. Look, really great momentum over the last few months in rent pay. We are absolutely flat out. We've got a couple of new staff coming and joining us specifically in the rent pay space. We've got a number of partnership opportunities that are rolling through at the moment that are all rent pay sales related. So really positive. The acceleration we've had on rent pay growth over the last few months, we obviously need to not only maintain that, but start lifting that. And that's a focus for us. The advertising sales side is important, the diversification. We've had some great wins in there and we need to do more of that. And then we'll keep looking at the partnership side as well. As our brand awareness, our product awareness increases, new opportunities are opening up and some of them are direct and some of them adjacent. So we'll keep focusing on that as well. And yeah, watch our cash. We've optimized our marketing. We're now doing partner marketing. So there's joint funding. So it lowers our cost in there. And we'll keep pushing forward on that. So yeah, look, really positive. Looking forward to continuing our growth over the Christmas period on rent pay. We know rent.com.au will slow as people take holidays. And then we're getting our ducks lined up for a big January as we kick in from week 2 when everybody's back in. So look, thanks very much. Jan, have we got questions lined up? I know we've got some we've already received.
Yes, we did receive some via email before the meeting, but there are just some instructions on the screen at the moment. So just the Q&A icon, if you just tap them in and type your question, we'll answer them as we go through. Just a couple, just starting with the ones that were emailed through. So there was a question from Jason asking, when does the rights issue finish? So Jason, the answer to that is funds need to be received by Atomic Share Registry by 5 p.m. On Monday, the 4th of December, which is that's next Monday. Second question was from Mark. You spent 2.4 million on acquiring about 6,000 customers in 2023. Is that sustainable? Greg, do you want to answer that one?
Yeah, there was a slide in the pack, which I don't have in front of me at the moment, but we broke it down. So that 2.4 was not all, obviously, on the marketing side. We chose to go into the payments space. It's heavy on regulation. It's heavy on compliance, as it should be. So, we've got AML obligations, we've got KYC obligations, obviously ID verification, etc. So there's a cost to be borne to play in this space. That cost, however, is not linear or doesn't grow at the same rate as our customer base. So we're wearing a fairly high fixed cost at the moment, but that will continue to reduce as a percentage as we go forward. As I mentioned on the marketing, we've had some great learnings and some great successes from our marketing, and we're going to re-optimize that as we continue to go forward.
Thanks, Greg. The next question, I think you've pretty much answered this with Jeremy's, but Kirsten also asked just when we expect to break even.
Yeah, so two levers, subs and ARPU. The next range of products that we release will be ARPU focused. So lifting that is key for us, but we're around that 35 to 40K mark is break even for us on our current cost structures.
A question from Lee regarding, you've mentioned a couple of times the joint marketing before Christmas. Can you expand on that at all?
Look, I can't, unfortunately, I was hoping to today, but I can't. Look, we're working with one of the payment providers to bring in some new functionality to the market. We'll be the first in Australia from a rental payments platform, but the solution, if you like, is not just about renting, it's payments in general. So yeah, some joint funding there. That'll kick off, I'm hopeful in the next week, and that'll run for 4 to 8 weeks from there. I'll be across our own channels, social media, etc. So trust me when I say you'll see it when it comes.
Just a final one from Alex. Have you heard that Commonwealth Bank is looking to enter the rental payments market?
Okay, so this is a fresh one because that was literally just in the AFR this morning. And I did see the article just before we started. So for those that may not have seen it, there was an AFR article mentioned that Commonwealth Bank is entering the payment scheme, and it spoke a little bit about Deft. I don't have any more detail than what was read there, but Deft have been around a long time. They're the largest payments operator in the market, and obviously they use that as a platform for great tie into their business banking solutions. So with CommBank coming in, I see it as the same way, landlord lending, business banking for agencies and whatnot. Be interesting to see their products and services that are part of that, but I suspect it, it may look and sound a little bit like Deft as well. It's interesting though, it's kind of a moving market in the competition, in terms of competition. We had NAB shut down their rental payments platform recently. We've seen a couple of other smaller operators close the door in the last couple of months. I think also it's going to be interesting. It's going to be interesting 12 months, I think, the next 12 months, because I think there's going to be a number of existing players that will come under a bit of external pressure from their cost, or if you like, the price. There's examples out there of some payment operators charging a variable rate on direct debit. So a customer just using standard direct debit can be paying $10, $15 for that privilege. I just don't think they're sustainable. We're in the middle of a rental crisis. We've got a federal and state governments trying to address it. Unfortunately, most of their levers involve construction, so there's long lead times. So I suspect that it's a matter of time before a bit of a focus comes in this space. And I guess that's the secret of RentPay. Because we're consumer focused, because we're the only ones that allow consumers to join us, we're very conscious of that. I mean, 20% of our customer base is using RentPay through choice. That the agent doesn't even know we're there. I mean, obviously that's a great sales channel for us, and we utilize that quite well. So, we have unique features in the market. We're focused on the consumer. We're continuing to develop our consumer-facing products. And of course, we have Australia's largest portal as our main consumer channel. So I think we're really well placed for more competition entering the market. I'm a little interested because I think it'll potentially open up some consolidation opportunities. It'll potentially raise the question and around more property managers and agencies. And when we line up as a competitor set, we're very competitive. Most of the agencies, well, all the agencies that we've onboarded have obviously come from alternate payment platforms. So we understand the market, and we're very, very well placed in that.
There are no more open questions at the moment, so probably just give you a last chance if you do want to ask any questions. Please use the Q&A icon at the top of your screen. Alternatively, please feel free to email any questions through to investors@rent.com.au, and we will always get back to you on that. Gary, I'll hand back to you. There's no more questions.
Thanks very much, Jan and Greg, for an excellent presentation and update. And I must say that on behalf of the board of directors, we're very excited. It's been quite a tough and long haul for us to get here, but all of us remain absolutely committed and very excited about the next 12 months ahead. So thank you all on that note very much for your attendance, and we'll close the meeting now. Thank you.